Hi, Stephen Cruz here for another episode of the Mortgage Q&A with myself, Stephen Cruz at the Verico Mortgage Solution. Today, I wanted to take this opportunity to talk about a change in some of the qualifying rules that the Government of Canada or the Minister of Finance basically brought down today officially, talking about how home purchasers with less than 20% down or high ratio home purchasers, how they now qualify to purchase a home. So the mortgage qualifying rules have changed effective October 17th. So I thought I would talk about that today because it's a really important change that makes a significant difference on what someone can afford today versus 2 weeks from now. Basically on October 17th, the new rules will be in place. So let me just share my screen and then I can show you what's going on. So we'll do that. All right. And we'll just run the slideshow. So the qualification rules were announced today to change effective October 17th this year. And basically, the qualifying rules are, there's a means test that all high ratio mortgage purchasers, which means someone who has a mortgage has purchased a house with less than 20% down. So a conventional mortgage is a mortgage where someone has 20% or more down. A high ratio mortgage is a mortgage with 20% or less down. And so the old rules, which were changed a number of years ago, can't remember the exact year, but 3 or 4 years ago, were that if you chose a 5-year term or longer, then we would qualify you to purchase a house based upon the interest rate that you were taking. So if, for example, today, if you took a 5-year term, the interest rate available is 2.44%, and that's what we would qualify you at to allow you to purchase a house. If you were choosing a shorter term or a variable term, so 1 6-month term, 1 year, 2, 3, 4-year term, or a variable mortgage, then we had to use the Bank of Canada qualifying rate, which today is at 4.64%. So it's a substantial increase in the interest rate and a little bit of an increase in the payments, but it will affect what people qualify for when they purchase a house. The new rules basically are put into effect in a couple of weeks from now, is that all high ratio mortgages will have to be qualified based upon the Bank of Canada qualifying rate at 4.64. And this also includes what is called back-end insured mortgages. And this really doesn't affect the big banks as much. So if you were dealing with TD Bank or Scotiabank or RBC or whatever, they don't necessarily back-end insure their mortgages. But many of the other lenders who are offering competitive interest rates, who are offering competitive prepayment programs, and also very favorable calculations to pay out the mortgage, many of them will be affected by this. So even if you have a conventional mortgage and you set it up through one of these other lenders, then they will typically have to use this qualified Bank of Canada qualifying rate to qualify you to purchase. So let's look at an example. Under the old rules, if you earned, or you and your wife, or you're a couple earns $85,000 and they want to purchase a house, then they would qualify to purchase a house of up to $525,000 with 5% down. And if they were to choose a 5-year term at today's interest rates of 2.44%, the qualifying payment for that mortgage is $2,229, but the actual payment is the same, $2,229 a month for the principal and interest of the mortgage. The new term, the new rules, if you earn $85,000 a year and you want to purchase a house, the maximum purchase price you now qualify for is $434,000. So $434,000 with 5% down. If you choose, again, the 5-year term, your actual payment is only $1,900, but your qualifying payment is $2,400. So they're using this means test to help, they say, to help soften and slow down the escalating markets in Vancouver and Toronto. I'm not sure what they're going to do to the rest of the country, but these are the new rules. So if you or a friend or a family member that you know is looking at purchasing in the near future, you may want to talk to me or your bank or whatever, and let them know and get pre-qualified. Because if after the 17th, if you purchase after that date, then you may not qualify for the house you think you qualify for today. And so it's really important, if you're thinking about buying, this may force you to increase your timeline to purchase a house before the 17th and before these rule changes, unless you want to look at a house that could be, $100,000 less in value. Anyway, so that is the big change that came through today. Some of these rules, they talked about these rules over the last couple of weeks, and they kind of hinted at them, but this is the first time we've seen an official announcement for this rule change, and it's really important. Again, if you or someone you know is looking to purchase a house, you've been pre-qualified, you have to relook at the numbers, because after the 17th, your qualification will not be valid any longer. So it's really, really important for you to contact myself or whoever you're dealing with to make sure that you still qualify if you take possession or purchase a house after the 17th. I looked through the chat, and I don't see any other questions for this week, and this was the most important thing I had to talk about, certainly. So if you have any questions, you'd like to know anything else, and had any other mortgage inquiries, please send me a text, shoot me an email, reply on the Facebook page, and I'm happy to answer it during this mortgage Q&A. And until next week, have a fantastic week, and we will talk to you again.